Hey, Bobby Trades! I was screening for stocks with a low IV rank in percentile, which is what I do to find institutions that are taking option positions in stocks that have really cheap options. And when stocks have really cheap options on a relative basis, it means the implied volatility rank and implied volatility percentile is very cheap. So, of course, in this video, I'm not giving investment advice and I'm not encouraging options trading in any way. But I personally don't see how people try to navigate the stock market without looking at options activity and thoroughly understanding implied volatility rank and percentile. So, when implied volatility rank and percentile is at its lowest, that means the options are the cheapest they've been in the past 52 weeks on a relative basis. It means that if someone, an institution, obviously in all examples, is buying a straddle, that straddle is going to be the cheapest it's ever been. And so let's talk about some expiration dates for a straddle. 3-6 months out, those straddles are going to have pretty high gamma. The further out the expirations, let's say a year and a half, they're going to have lower gamma and they're going to have higher vega. Vega and gamma being very cheap and very high are conditions that occur when implied volatility rank is low. So just to describe gamma and vega for a little bit, a quick way to talk about it is that it's very good for the option buyer for gamma and vega to be very high. Now, what's interesting about that is that gamma and vega are highest when options are cheapest, when implied volatility rank is lowest. So vega is going to be the bigger beneficiary for further expirations. That's the one that directly benefits from volatility IV going up. Gamma is the rate of change of an option's delta. It's going to be more beneficial for the closer expirations. Okay, so that's all very good for option buyers, and both of those conditions are best when options are cheapest. So that's why I look at these stocks. Now, what's the thing about long gamma positions? Well, they're not picking a bias, right? This screen right here, this screen options, when I go to the unusual options volume, I sort by the lowest put to call ratio, I refresh it, and then I sort by the highest change or the highest 1 month change in volume. That is giving a clear bias to the upside. This screen right here, and really the strangle and straddle screen for additionally, the strangle screen a little less so, is not giving a bias. It's just saying that long gamma positions that are delta neutral, are the cheapest, and therefore they're benefiting option buyers. So what's that all mean? Well, it means that the stocks, if institutions are all buying straddles and strangles on these stocks, expecting a big move, also married puts when they buy shares of a stock based on the delta equivalency, then it's not going to be a very good time to be an option seller at that time for a few reasons. One, the options are the cheapest they've been. So short strangles and short straddles are not going to be the most beneficial to sell. And also because all the institutions are buying the long gamma positions. So they're kind of flooding gamma, and they can create a gamma squeeze to the upside or the downside. So anyway, big moves coming from these stocks. And what's another factor? Well, these stocks typically have lowest implied volatility when they haven't been very active. We're going to see a lot of coiling in these charts, a lot of lack of enthusiasm, a lot of stocks maybe that we haven't really had much interest in FinTwit or the market as a whole, but perhaps the institutions are getting a head start. So we're going to look at some recent leaders that I predicted. Six Flags came from the bull screen that I mentioned previously. This is 1, 2, 3, 4, 5. Wave 1, Wave A, and ABC, Wave 2, Wave B, and a wave 1 and a wave 2 that occurred. So looking at Six Flags and the other thing with all of these, they're travel and leisure stocks, they're recreational stocks. We're going to go over, these are the stocks I plan to go over: Six Flags, Cinemark, Expedia, Archer Aviation, Joby Aviation, Boeing, Carnival Cruise Lines, Nordstrom's, JetBlue, Tesla, Ford, and Porsche. So a big travel theme, transports theme, and some recreation retail theme. Take a vacation. That's what the stock market is saying. The charts are certainly saying for Six Flags Wave 1, Wave A, Wave 2, Wave B. It looks like a Wave 3 and Wave C is in progress for Six Flags. I expect it's heading into the 50s. The length of Wave 1 placed at the Wave 2 low is how that target is found. And so I expect it's heading towards 59, potentially even higher before a shallow Wave 4 correction and a Wave 5 higher. So this would be kind of one of the leaders. Notice that I've been able to kind of uncannily predict stocks. Even after the semiconductor stocks all exploded, the cryptocurrencies exploded. A lot of the large caps, all the big software stocks, I've still come into 2024 and had a remarkable stock picking adventure. Clearly, a system developing, and this came from one of the better ones that had huge, unusual options volume. It was all clearly to the bull side and was multiple days in a row. So this is what I expect for Six Flags. It's in the middle of things. I expect 23.16 won't get broken. We're getting far from that. The original invalidation was 18.29. Another one, I've talked about AMC Theaters a lot. That stock was up 4 or 5%, wasn't it? But this is a Wave 1 and a Wave 2 for Cinemark. Exact same screen, very similar. IMAX had that big interesting news after I posted about it with Cinemark on the same screen again, but this is a Wave 1 and an ABC Wave 2. So I've taken this Andrews pitchfork and I'm connecting the beginning of Wave 1 with the high of Wave 1 and the low of Wave 2. Look at all these reactions. Look at these uncanny wicks right here. Uncanny, uncanny, uncanny. Ooh, it looks like that's a very valid pitchfork. I know that sounds like a little woo-woo, but I expect that that's actually a law of physics. And I won't get into the laws of physics right now. For every action, there's an equal and opposite reaction. And if the Elliott wave count is correct, in my experience, if there's a Wave 1 and an ABC Wave 2, and the Wave 2 ends past the 61.8 to 78.6% retracement, and it does end up being a Wave 2, then on that cycle, Wave 3 does reach the median of the Andrews pitchfork. Thank you for coming to my TED Talk anyway. That obviously is all if the count's correct. I do suspect it is. So from this low, this is a small degree Wave 1 and Wave 2. That's where the invalidation came from. The 61.8% retracement right here, and I actually just moved it up to this low of 13.19. So I think it's within a Wave 3 of Wave 3. The target for Cinemark is 27. It can get to that blue 27 target, and then what can maybe happen, have a Wave 4. I know this sounds a little wild, but look at this. Oops, wrong degree. A Wave 4. Watch it go to the lower bound of this pitchfork. Just watch if this happens. That would be gaming it a little perfect. Cinemark goes to 27, and then Wave 4 consolidates on this pitchfork. Maybe goes a tad. No, I think it's just going to consolidate, tap it a little bit, and then go on a Wave 5 higher. And so that's this is what I would expect for Cinemark to keep playing out. Another, fun movie theater, roller coasters. It's a lot of fun. The stock market wants to have fun. Some people need to be told, to take a vacation. It looks like Mr. Market wants a vacation. Is it possible in the long term Cinemark's heading towards the median of this Andrews pitchfork? We've talked about some volatile theater stocks before. Heck, why not get into it? Yeah, GameStop is GameStop. It's all kind of thematic, recreation. These are real companies, regardless of what the media says. I was, a little surprised that GameStop is. I don't want to be a fundamental analyst right now, but this company, with all the cash that it has, $4 billion in cash right now, and it had 5.2 billion annual sales, and the annual income was positive, and the earnings per share for the trailing 12 months is positive. I don't know. Anyway. No, it's a guy tweeting memes that moves GameStop. This is a Wave 1 and a Wave 2. I did predict that was Some guy tried to say, oh, it didn't hit 70. Okay, it went from 22 to 65 in a couple of days. So just to reiterate, if I'm ever lucky enough to catch really anything over 100% return, unless it's something that's paying out a substantial portion in dividends, like my investment in NVDY or CONY, I will typically begin to take profits in such a fashion. Let's say I'm up 150%, I'm at least going to be taking 20 to 30% off the table, because if I'm up 150%, I can take up to 50% off the table, and all that 50% is pure profit, and I have the original exposure. If we want to get fancy with the Greeks, the original delta of the trade, and I still have taken off those profits. So I always do it in a manner such as that. So GameStop did go up to 65, 66. This is, I think it's confirmed. I hate to use that word confirmation on a stock like GameStop, but I think it is an incomplete sequence. I think that guy does have a point. Wait, pup, it didn't reach 73 yet. Is it in an incomplete sequence towards the 70s? Above 17.70, I do still believe there are more highs in store for GameStop in the recreational side of the market. Anyway, let's get back to the real theme of this video. Expedia looking very good. As far as I think that, yes, I think that Expedia is looking very good. This is a 1-2 wave 3. This is for the textbooks. Look at this monthly. Oh, it's beautiful. Renoir right here. This is Renoir 1-2 wave 3, highest high on the monthly RSI, shallow wave 4, and a wave 5 higher. You gotta see the art in this, and I promise the best I'll do. 5, ABC 3, 5. It's gorgeous. Okay, so from this low, we can even see this again happen on the weekly. Let's look at this RSI and subdivide this right now. 1, this is called a fractal. It's happening again on a smaller time frame. And then this RSI wave 3, you can just clearly see this is this big thrusting wave 3, makes the highest high on the RSI. Very clear. Wave 4, and a wave 5 that ends with momentum divergence. I pointed that out too. And now from this low, it really looks like it's coiling yet again. Yes, another 1, 2. 1-2 nests from this low. So I'm actually going to save some time, and I'm just going to subdivide what I think is the most important 1-2 from this low. But even 1-2, yes. 1-2, no, this isn't wave 3. It's another 1-2. Why is this not wave 3? Because of what those people always say. They act like they're not my friends when they point this out. Wave 4 doesn't break, shouldn't gash through the wave 1 high in Elliott wave. The principle is that wave 4 retests the wave 1 high, and wave 5 is the length of wave 1 placed at the wave 4 low. So a lot of times when a wave 4 is right here close towards this wave 1 high, they'll say, it's touching the wave 4, it's touching the wave 1 high, it's touching the wave 1 high. Okay, so if it's not a wave 4, just one fib retracement lower, it's a wave 2. And that's what I believe this is. And then the ABC correction's what's really sealing the deal. Oof. Oof. Let's look at it on this. Let's get up close. It's like in football when they measure the tapes or they get the chains out. Oh, it's so close. Did they really truncate this wave C? How evil of them. Anyway, me and Expedia will get a room. This is 160.05. This low, 92.48. Right at the 78.6% retracement. That's really the money-making fib. That's where the magic happens. Making sure I got that high. Never be sloppy with the labeling. Oof. And then this is where I'll go real quick with these extensions. But I think this is going to be an important leader. The invalidation is going to be 107.25. So this is Archer Aviation. Oh, and just to finish real quick. Yes, 1, 2, wave 3, then a shallow wave 4, and a wave 5 higher. If that wasn't clear. Above that wave 2 low. Archer Aviation. This one you guys actually pointed out to me. This high is 7.49. This low is 1.62. It got off to a nice start. I think that low of 3, a little tight. 2.88 is a nice invalidation. So this is a wave 1, 2, 3, 4, 5 waves impulse. I thought this ABC correction was very pretty. This was pointed out during the live stream. Right there at the 127.2% extension, I think that wave C is going to hold. The length of wave 1 placed at the wave 2 low can take Archer Aviation all the way up to 8.94. That's a long way away target. What's this stock do that's so cool? I think it's flying cars. I couldn't believe it. You guys requested a flying car stock on me. Archer Aviation is involved in designing and developing electric vehicle takeoff and landing aircraft for use in urban air mobility. Joby Aviation. I think this is a very pretty chart. point out the time fibs. I connected the beginning of wave 1, the start of wave 1 with the end of wave 1. And I think the subdivision of this is very clean, that it's 5 waves. And this is 5 waves up. Wave 1, wave A. This low is 3.15. This high is 11.98. Right there, the 78.6% retracement. Notice with the time fibs, very pretty. Connect the beginning of wave 1 with the high of wave 1. The 2 time fib, the 3 time fib, right there I think is exactly on this weekly time frame where the big move is going to begin. So this is wave 2, wave B. That's 5 waves up. This is 3 waves back. So even with the time fibs for the weekly, I think wave 3, wave C, it can go further than the length of wave 1 placed at the wave 2 low, and that target is 13.48. That's plenty for now. And I'm going to give a time fib. I think that's going to be hit by June of 2025. Now, that's pretty far away, and that's a pretty huge gain. 100% gain in a year is still a lot better than the S&P. That's about 5 times the S&P's historical average, I believe. So that would be big in itself. But I think wave 3 can also be bigger than the length of wave 1 placed at the wave 2 low. It can go to the 127.2% extension, which is a little higher. Anyway, I wanted to give a time target of, I guess, this 5-time week fib, which is the week of June 23, 2025, almost exactly a year from now. How interesting. How interesting that that could be the case, that the low, because remember, the 1-year period is for capital gains. If they were to capitalize on a big capital gain, they'd be doing it right around a year from now for their accountants to be extra happy. So that's nice of them. Boeing, and I gave that invalidation, right? I didn't want to do, but Joby was a beautiful chart, and so it could be, I could be wrong about it. This low is 4.58. I do believe that's the proper invalidation. 3.66 is too wide. I think 4.58 is pretty tight, though. So I'm going to say 4.58 is a tight invalidation. What could it be? I'll just zoom in. I haven't looked at this daily. One, ABC, 2, 1, 2. I could definitely see it. So I'm going to say that low is 4.53. That's a little better than what I thought it was. 4.50 is going to be the invalidation. That's not 4.58. There we go. Okay, so 4.50. I'm just going to use that as the invalidation. That wave C has been struck, and a wave 3, wave C is in progress. approximately a year from now, I expect Joby Aviation to be at 13.48. On that wider long term view, if 4.50 did go, 3.68 is a wider level, but it's a more meaningful level. So that's Joby Aviation. Boeing. Could it really be time? The one thing Boeing has going for it is that the one kind of accepted hocus pocus in stock market lore is that when it seems like the worst time to buy a stock, that's when it's the best time. And this is kind of the most vocal people have been that Boeing's a disaster. I do think it's just kind of interesting. We have this Chevron ruling with the Chevron. Uh, Go look up the Supreme Court Chevron ruling. It'll tell you exactly what that was. But what a lot of people think is that it might limit regulatory agencies, from making things safer. Is one side of the argument. And so, with everything going on at Boeing, that's kind of been one of these sectors people are worrying about in that regard. Are we still going to be able to make sure they're safe? Because going into this, they weren't. Anyway, could those laxing regulations be good for Boeing's stock chart? The Elliott wave suggests it actually is. So on the long-term time frame, it would also go into the fact that the scariest time to buy Boeing is kind of the most interesting one. That's all based on just my Elliott wave opinion and seeing options analysis of institutions buying strangles and straddles on this stock. I believe they're attempting to accumulate it. Obviously, the bears could be right, and Boeing could go bankrupt. I think this is 1, 2, 3, 4, 5 waves. Wave 1 and a wave 2 on the long-term time frames for BA. I'll keep that the right degree. B, C. And so in the big picture, on 3 pretty long-term time frames, there could be 3 wave 3s in progress. Wave 1, wave 2, wave 3 in black. On the long-term time frame, 1, 2, 3, 4, 5. Wave 1, ABC wave 2 in blue, wave 3 on this time frame. And then from this low, 1, 2, 3, 4, 5. Wave 1, wave 2 at the 61.8 to 78.6% retracement. So far as Boeing has given that reaction, the invalidation was 146. And could Boeing, a little tighter would be 159.70 that this low has been struck. Could Boeing begin a wave 3 of wave 3? In this first wave 3 time frame, the target is 311. That's found by taking the length of wave 1, placing it at the wave 2 low, and that would be the wave 3 target. Then there could be a shallow wave 4 that retests the wave 1 high. And a wave 5 higher. And the shorthand target for taking the length of wave 1 and placing it for the whole 1, 2, 3, 4, 5 waves impulse, the shorthand target is taking the length of wave 1 and placing it at the wave 1 high. That's because of the Elliott wave principle that wave 4 retests the wave 1 high, and wave 5 is at least the length of wave 1 placed at the wave 4 low. So that lines up for this red 1, 2, 3, 4, 5 waves impulse. 1, 2, 3, 4, 5. Because wave 3 is the length of wave 1 placed at the wave 2 low. That lines up this red time frame target lines up for all 5 waves with this blue wave 3 target, the length of wave 1 placed at the wave 2 low. The 161.8% extension is 395.72. So there's kind of a confluence around this, really around that 400 number. So for the long term, Invalidation 146 might still be useful. Boeing's had a little bit of a reaction from that. 159.70 is a little tighter, but the 78.6% retracement I still think is the most important level. So that's Boeing. Let's talk about another airline, JetBlue. I'll get into the daily count just to get a little more short-termness into the video. This high is 7.58. Perfect. 3.42. Bar chart. Looking good. So I think this is a 5-3-5 sequence. The 78.6% retracement of 4.31 isn't very useful. I'm going to try to get JetBlue just right. Wave 1, wave 2. Let's look at this RSI because I think the big headline is that this is 5 waves. And this is really the most important thing to learn to recognize. 1, 2, 3, 4, 5 waves up. When wave 3 is clearly the biggest wave and it makes the highest high. And notice by the way, on both of these times, basically on every time frame, here's some alpha, free game. On basically every time frame, look for wave 1 to get to oversold territory on the RSI. Wave 2 to retest the 50 mark. Wave 3 to make the highest high, higher than wave 1 in oversold territory on the RSI. Wave 4 again to retest on the RSI the wave 1 high. And then wave 5 to make a new high with momentum divergence. Recognizing that sequence is going to be the most recognizably good thing to happen to an Elliott wave theorist. And a lot of them can't. And you can tell when they start pulling out charts, they don't even have the RSI on it. Okay? So that's those are my views on that. That's 5 waves up. And here's why. I'm going to give you even more. More alpha. Because I invented this. I actually invented this. I'm not really like an administrative person, so I'm not going to get like a patent. Someone's probably just going to steal this and take credit for it. I don't really care. Maybe I should. I don't know. But I've invented something that's very useful. Adding time fibs to Elliott wave counts. My favorite one. Really, there's 2. On the weekly, really the weekly is the best chart. My favorite time frame is the weekly time frame in general. But it's the 2 ways I do it. My favorite, measuring for a large 5 waves impulse, measuring the beginning of wave 1 with the high of the small degree wave 1 within the impulse. Because that's going to say where the next correction ends. When with either the 5 or the 8. Okay? So, 1, 2, I connect the beginning of wave 1 with the high of wave 1. And it's not necessarily like where the correction ends. It's kind of like where the, I hate to say it, perfect, buy is, I guess. We'll talk about a different one with Nordstrom. It's a really good one with Nordstrom. Joby Aviation was a very similar one. So Joby Aviation was a good example of the other way. Measuring the entire impulse of wave 1, and then this big correction ending at the 3 time fib. So I'm looking for the 5 time fib to at least mark the end of the wave 3 bull cycle. This is measuring the small degree wave 1. And this is a really pretty one. When it ends at the 5, I expect wave 3. When wave 2 ends at the 5, I expect wave 3 to end at the 8 time fib. It's a little more daily, so we'll see if this works. 9, 19, 24 is the magic time fib, I guess. We'll see. One, 2, 3, 4, 5 waves up. Gorgeous. 1, 2, 3, 4, 5 on the RSI. Wave 2 at the 61.8%, retracement. This 5-time fib signals the big, you know, moment. The length of wave 1 placed at the wave 2 low. I expect it's going to take JetBlue to 9-ish. Now it can go higher than that. Just the shorthand way to do it. Taking the 161.8% extension. JetBlue can go to 9 to 10.15. And I expect it will do that by late September to early October. And I expect it's also going to hold above 4.93. So I expect JetBlue will hold above 4.9. This is like kind of I'm really trying to get this perfect. 1, 2, 3, 4, 5 waves up. This is from October to April, 6 months. October to April. Late October. Yeah, 6 months. So 6 months would be the wide time frame for 9.10. I expect actually wave 3 to be faster than the length of wave 1, place of the wave 2 low. These time fibs will work out, and the wave 3 is actually going to be done by 9 to 10 by late September, early October. Tesla, Ford, and Porsche. Tesla got off to a start. Let's just look at this. Oh, baby. Did it do it? Oh, wow. Woo! It did it. Oh. That's an incomplete bullish sequence, baby. How did I not catch that? I can't believe every single person on Finchwood didn't mention that. Anyway, so the Elliott wave theorists, we have a little alpha here. This is something that always happens. They're going to look at this little wick, and they're going to say, oh, it's a failed breakout, bruh. Failed breakout, failed schmakeout. Yeah, I'm shorting Tesla, bruh. 1, 2, 3, 4, 5, large wave 1, ABC. People think it can't be done. There's no way Tesla's gonna follow Nvidia. There's no way Tesla's gonna follow, XYZ. There's no way ARC. There's no way Kathy Wood. Kathy Wood's done. She's washed. She's dry. Nah, Kathy Wood. She's preparing for the liquidity flood. She's gonna take the ARC to Valhalla. I can't believe she sold Nvidia though. 1, 2, 3. I didn't sell Nvidia. I had a lot of NVDY. That's the best investment I've ever made, honestly. 1, 2, 3, 4, 5. Wave 1. ABC wave 2. 1, 2, 3, 4, 5. Wave 1. ABC wave 2 at the 61.8. What I'm measuring here for this ABC correction is the length of wave A placed with wave B high being where wave C ends. If you take your glasses out, you can see these red lines right here are measuring that. Those numbers are 159.21 and 130.40. So the invalidation originally was 130.40 to 138. Tesla's moved up substantially. We're going to focus on, and so in that longer term time frame, what can happen to Tesla is it can go the length of wave 1, place at the wave 2 low, being where the minimum wave 3 target is 334. Spoiler alert, Tesla gets running with its all these straddles and strangles they've been buying, and it just a Tesla wave 3 of wave 3 is not going to stop at 334. It's going to blow past that. There's going to be a wave 3, wave 4 might not even retest the wave 1 high, and there's going to be a wave 5 higher. So one of my goals, I'll just tell you, as Tesla's climbing this, I think I'm going to be adding short strangles on Tesla. I'm going to do it. I've figured it out. I have the master plan. They say, like, if someone ever says they figured it out, like, that's the top. But anyway, I am going to have a CRSH/TSLY bucket in my portfolio one day. But what I'm going to do is I'm going to add it to the long Tesla/Tesla position I already have. That's how the institutions do it. That's also something that, like, if someone ever says, like, that's a sign at the top, too. Anyway, I'm just going to tell you guys that. That's. That's what they say. That's the market lore. Anyway, I'm going to be blending CRSH and TSLY. Details to come soon. This video might not be the best time for that. But I also installed long Tesla and Tesla, which isn't having downside exposure, although Tesla does sell out of the money cover call premium. Lots of people argue, especially with Tesla's high volatility, that that's a form of hedging. Some people, still point to Tesla and say, hey, that's the one yield max with AIYY that hasn't had positive total returns on the blind average tests yet. I guess OARK is the other one too. Anyway, big tangent there. Let's get into the short-term Tesla count. What's the big deal here? It broke this high. That's an incomplete sequence. What's that mean, pup? Even if let's just move these two numbers for a little bit. Let's say a bear is saying in the long term, Tesla's within not a 5 waves impulse, it's within a counter trend rally. They're gonna say, what's that mean? Well, all counter trend corrections in Elliott wave theory are ABC corrections. So what Tesla did today is it did something called an incomplete sequence. Now, no one, especially an institution, can tell their broker Tesla's in an incomplete bullish sequence. But what that basically means is, from an Elliott wave theory perspective, if someone was going to argue that Tesla's within a counter trend rally on the long-term time frames, and that this is an ABC correction, their wave C target objectively is going to be the length of wave A placed at the wave B low. That's 226. Tesla's at 197. That means even if it's just for a few more days, a few more weeks, even the long-term bears are bullish Tesla until 226. There's an exception to every rule in Elliott wave theory, but that concept of incompletion up there with the 535 sequence is really some of the best reason to know this stuff. Anyway, so from this low, it's also going to be a small wave 1 and a wave 2. I don't think Tesla is within a counter trend ABC correction. I think this is a 1-2 wave 3. I'm looking for Tesla to go to roughly 235. My perfect target, I guess, would be taking these extensions right here, 244 to 235, then a shallow wave 4 and a wave 5 higher. If this wave 4 correction happens, I'm going to be buying CRSH and TSLY together, and I'm going to start building that position, even if it's just a separate bucket alongside a long delta Tesla position. I think I might even just add a CRSH TSLY bucket altogether. But there really is a way to do it where I just kind of slowly add it at a ratio with Tesla higher. The thing with Tesla is that it's got really high upside. So what's the big reason that I'm doing this? It allows me to buy more shares of TSLY and collect more huge dividends from Tesla's implied volatility and covered call premium to the upside, alongside the fact CRSH sells the naked call. So it allows me to buy more shares of Tesla, collect more income from Tesla during an upside rally, and remove the directional risk, at least a massive portion of it, by blending CRSH together. So I'm going to back test CRSH and TSLY together, regardless of it makes it to the ETF total return calculator database. Anyway, I think that's my plan for Tesla, and so I'm looking for 235 to 244 to be the next target, and I'm probably going to start adding CRSH and TSLY together alongside a position I've already had Tesla blended with TSLY. Let's look at another auto stock real quick. Ford. From this low, General Motors has gotten off to a start. I'm not going to get into it in this video. 1, 2, 3, 4, 5 waves impulse. Now, this time, we don't have it where wave 5 ends with momentum divergence. It is the highest reading on the RSI. So the big thing is, really the key is to look for the 5 waves subdivision within the RSI. I've seen it. Ford could have been more perfect, and it's also important to remember that No one's really allowed to tell Mr. Market to perfectly conform to an Elliott wave count. The big thing to look for on the RSI is there a 5 wave subdivision? It's not always perfect where wave exactly how I described it with during the JetBlue kind of tutorial, and really Expedia on the monthly was just real quick a beautiful example. I mean, this is exactly kind of what a perfect RSI looks like. Wave 1 makes a high in the oversold reading on the cycle. Wave 2 retests 50 on the RSI. Wave 3 makes the highest reading within the whole impulse, and it's the biggest wave. Wave 4 retests 50 on the RSI. Wave 5 ends with momentum divergence. That's the perfect sequence. So, Ford, I think this is 1, 2, 3, 4, 5 waves up. And this is an ABC correction that ends at the 61.8% retracement. What I do think is really cool about Ford's count, if I measure the large wave 1 on the time fibs, it looks like the perfect bottom was at the wave 2 time frame. So that's that market symmetry principle. Wave 1, wave 2 looks like that was the low. I'm looking for wave 3, possibly. Is it possible that wave 3 is going to end at that next fib? I mean, doesn't that make sense? But even within the wave principles, it would mean wave 3 is the length of wave 1 in time and price. And it would mean that it goes to that wave 3 time fib. And it looks like wave 2 ended perfectly at the wave 2 time fib. So I'm looking for wave 1, wave 2, wave 3 to begin. The time target is 8/18/2025. And that target, if it does get hit, is 31.39. So 10.82, if that were the low, that would be a great invalidation. 9.63 is the wide long-term invalidation. Ooh. But I do think from this low, this is a wave 1 and a wave 2. Let's see if we can get a better invalidation. No, it looks like that's going to be the best invalidation. 9.63, a little wide. Look at that ABC correction though. Okay. Never mind. This ABC correction, I'll get a tighter invalidation. A, B, C. Oh, that's pretty. Crikey. This wave 2 low of 10.82 on the small degree, if it's 1, 2, 3, 4, 5 waves, this could be, and I expect it is, a 1, 2, 3, 4, 5 leading diagonal. So this wave 2 low of 10.82 can be a tighter level. I think it's a useful level too. So yeah, something like this for Ford is what I expect. Porsche Auto Group, just another one. Pretty. 1, 2, look at the RSI. Wave 3, highest high. Shallow wave 4. This is PO8HY, the ADR. Wave 5 ends with momentum divergence. There's an A, B, C correction. And I measured the length of wave A, place of the wave B high. It looks like wave C ended at the 161.8% extension, possibly even a wave 1 and a wave 2 forming from this low. But it's a beautiful weekly setup. 1, 2, 3, 4, 5 waves. Wave 1, wave A. Measuring the time frames, it looks like wave 2, wave B ended at the 3 time fib. That means the wave C, wave 3 time target, it's a little far. It's 5/4/2026. Now, how could the upside be above 4.37? That was a tight invalidation. 3.02. I mean, there's no really point in a 10-cent stop, but I do believe that my original post is going to have predicted this perfectly. 4.37. Yeah, so a 10-cent stop is going to be way too tight. So I didn't quite realize it was this tight of an invalidation when I posted the video. 3.02 is pretty wide, but even within this low, is this an A, B, C correction? I really think it is. Maybe 4.37 is gonna work, because look at that. A, B, C correction. So that actually could give a better level. 5.576. 4.85 and 5.47. So 4.27 could be a tight stop. And I expect should those levels hold, a wave 3, wave C, beyond this wave 1 high of 12.37 to occur, and that's plenty from now. And I expect it to happen before 2026. Wave 3, wave C could obviously be further than the length of wave 1 placed at the wave 2 low. So that could definitely be the case. The length of wave 1 placed at the wave 2 low gives a minimum target of 13.90.